Well, thank you for watching this video on fixed costs. Over the course of ideally the next 10 minutes or so, we're going to discuss what a fixed cost really is, why they're important to consider for a small business owner, and we're also going to discuss some general categories of fixed costs just so you kind of get the idea of how to point out and delineate between a fixed cost and maybe a just variable cost or something else. And so for starters, let's start by defining a fixed cost. And a fixed cost is a type of cost that does not vary with production. And what I mean by that is depending upon how many units that we sell. If we sell 5 units, our fixed costs are going to stay the same. If we sell 20 units, fixed costs are going to stay the same. If we sell 50 units, fixed costs are going to stay the same. So within what we call a relevant range, fixed costs are going to remain unchanged. They do not vary with production. Now, variable costs, we know, do vary with production. And so if we are, let's say we're selling tables, variable costs for tables would be things like the actual materials used in the tables. And so as I sell more, obviously my variable costs increase because I need the materials to go into making the table. I need people to assemble the tables in order to sell them. And so the two are very much so related. As your selling, right, as your sales go up, your variable costs go up. But for fixed costs, as sales go up, fixed costs do not. They remain unchanged. Now, the important thing for businesses when they first start out is to be very careful of accumulating fixed costs. So going back to kind of VC or variable costs, right? We talked about they vary with production. So if I sell more tables, I have more variable costs. If I don't sell any tables, I do not have any variable costs, right? Unless I've accumulated a bunch of inventory, which is another discussion. So if I don't actually have any sales, I don't have any variable costs, which is not that big of an issue because I'm kind of clean, right? I don't make any money, but I certainly don't lose any money. Now the problem with fixed costs is I pay them regardless of sales. So if I don't sell anything, I am still on the hook for my fixed costs, which is very, very concerning, especially when individuals first start businesses, because usually you're looking at months, if not potentially years, depending upon what you're doing, to actually be profitable. And so during that point in time, you really want to do what we call bootstrap, and that is maintain very, very low cost. Try to get by with as little as possible, because by bootstrapping, you increase the likelihood of you being profitable, and then as profits continue to rise, you can start accumulating some different fixed costs. And as we go through the list, you're going to see kind of what I mean. So let's talk about some of the different types of fixed costs. There's a really easy kind of acronym to remember all the different fixed costs, and it is USAIIRD. Okay, so that is the kind of acronym for fixed costs. And so let's go through these like kind of line by line so you can get a feel for what they're included. So the first one is utilities. Every business has utilities. We as individual consumers have utility expenses. They include a number of different things. This is a very large category, actually. And so utilities can include anything from simply internet and phone expense, can include maybe like fees for local garbage pickup, and a number of different things. And so utilities are kind of all-encompassing, but they are, once again, a fixed cost, because regardless of what I sell, if I have the internet or phone service, I'm still going to pay it, right? Regardless of what I sell, I'm going to pay the city certain fees so they can collect trash if I have a physical location, and a number of different things. And so these, once again, do not vary based upon production. I pay them regardless. The next one we have are salaries. And very specifically, these salaries are what we call indirect labor. And so keeping with our prior example, right, if we sell tables, the labor, right, to pay people to actually put the pieces of the table together and create it is what we call direct labor, because they're directly involved in the production process. Okay? Indirect labor are the people that we pay that have no participation in the production process. And so these individuals include managers, secretaries, any type of administrative position. And so usually early on for most small businesses, it's generally the individual kind of sole proprietor doing all the work. And so chances are you may not have any salary expense, because remember, we're only considering the indirect labor, not the labor directly involved in producing the product or actually offering whatever service it is that you're selling. The next one is advertising. And advertising is just the expenses that you incur for kind of promoting your company. And so we're trying to make people aware of that we exist and what we offer and those different things. And early on, maybe you don't have any advertising expenses. Maybe it's simply printing flyers on your home printer and trying to canvass neighborhoods. Maybe it's actually, paying for radio advertising or running banner ads on certain websites over the internet. The important thing is, regardless of whatever advertising that you use, you're going to pay that expense even if you don't sell anything, right? The main purpose of advertising is creating brand awareness and all those different things. And so we're going to pay the expense, but we're not tying it to production, so thus it is a fixed cost. All right, the next fixed cost, one of those first I's, is interest. And interest, of course, is basically kind of paid on loans or debt. And so if you do take out some type of loan as a way of getting some kind of cash, as a way of starting your business, right, purchasing equipment or different things, then you may have an interest expense. So once again, regardless of what you sell, you're going to have to pay interest. The bank is going to want to receive your principal payment and a little bit of interest every month, regardless of if you sell anything whatsoever. So certainly something to be considerate of, and to make sure that you have enough existing cash to cover those expenses, keeping in mind some of the difficulties that are going to be inherent early on for starting an actual business. Next, we have insurance. In insurance, we all probably know the purpose of insurance, right? We're trying to protect ourselves in the event that we have some type of liability, whether it's driving, whether it's just general liability, life insurance, all those other things. And so many businesses have general liability insurance, basically protecting them in the event that somebody tries to file a claim for negligence. And that will be a fixed expense as well, because once again, regardless of what I sell, I'm going to pay this particular expense. And you should purchase insurance. It's generally a pretty good idea. I'm going to move over here just for sake of room. And so the R is rent. Now, for rent, everybody has a difference in opinion. I generally advise trying to avoid paying rental costs early on. And if you absolutely do, trying to negotiate a what we call month-to-month agreement, meaning that you're not tied in for a year or two, which is very, very bad because those contracts typically include penalties if you break the agreement. But you're going to try it out. And so if you go 3 months or 6 months and you realize it's not working well, you essentially can close down shop. So that's usually what I advise doing. But generally, I try and recommend not to incur this type of cost, because this usually, for most small businesses, will be the most significant fixed cost early on, is going to be rent. And so if you can minimize that, you can certainly increase the degree to which you'll be profitable at a much sooner time frame as well. But once again, the property management company is not going to care if you sell anything. You've made an agreement, and they expect you to honor that agreement by paying them the rent that they owe. And so that will cause some significant cash flow issues early on because you're going to want to be investing that in your business and expanding and purchasing equipment and doing advertising and all those other things. And so try to minimize that. If it's absolutely important to your business model to have a physical location in a certain area, try to negotiate month to month. That way you got some options in the event that maybe you want to do a change of plans. You're not stuck into that agreement for, let's say, a year or so. And the last one is depreciation. This is the last fixed cost that's part of all the fixed costs that we're identifying here. And depreciation is simply what assets lose each year. And I say each year, but this is usually can be expressed on a monthly basis as well if you want to. So I'll just say what assets lose in value. The truth is that certain equipment, certain plants like property, they're not worth what you paid for them after a given period of time. So if you buy a truck for your business and it's valued at $20,000 when you buy it, 2 years later, we certainly know it's not going to be valued at $20,000. You're going to have wear and tear, which causes those items to decrease in value. So as a result, we're not allowed to claim the full purchase price for value on what we call a balance sheet, which simply shows assets, liabilities, and your equity and all those other things. So as a result, we have to take into account depreciation. Now, depreciation is a fixed cost, but you're not actually losing any money whatsoever. It's simply the reduction of the asset that you're claiming on your balance sheet. And although we include it as a fixed cost, you're not actually paying anything out. And so this is really for accounting purposes. So for the most part, you're kind of looking at these items in here. Depreciation, although you'll add it up on your fixed expenses and all those different things, it isn't actually money that's leaving your organization, although we still actually consider it. So those are some of the different costs here. Like I said, try to manage these very, very carefully. Fixed costs are so important because regardless, I know I've mentioned this like 7 times by now, but regardless if you sell anything, these are going to be paid. So be very careful of accumulating them, especially early on when there are some cash flow issues. You know, businesses are rarely profitable in the first several months. Gradually, you can begin to accumulate them as time goes on, as your products begin to sell, and as you have some additional options by selling those products and getting some cash flow and some profitability going. Then you can start taking those on an as-needed basis, but be very leery of accumulating those, especially in the beginning. So hopefully that's helpful. If you have any questions, please do go ahead and post a comment in the box below. I'll get back to those as soon as I can. Thank you very much for watching and have a great rest of the day.